Good evening, all the joinees. Thank you for joining in. This is Prajakta. I would like to warmly welcome you all on behalf of NGEN Research. Meanwhile, others join. Let us have a brief introduction of the topic that we are going to cover today. Today, we'll be discussing on performance comparison of mutual funds. In this discussion, our focus is going to revolve around four focus areas. One is understanding the query tab to effectively screen mutual funds, because this is in addition to the screener tab that we already have. We will understand small limitations of the screener tab, and then we will proceed to the query tab as to how we can address these limitations. Here, we will start off with building a query with basic conditions to screen mutual funds, and then we'll go forward to intermediate and then advanced stages. Secondly, we will take the screened funds using the query tab that we would discuss in the previous point to do their respective performance comparison with respect to one, their benchmarks, and two, their category averages. Post that, we will have a look at risk versus return scatter plot on the compare section of NGEN Markets. We'll see what all parameters do we consider on this scatter plot, and we'll see how the positioning of mutual fund changes the moment we change in the start period. Lastly, we will have a look at what position overlap and correlation analysis mean on NGEN Markets. And lastly, we'll throw the forum open for a Q&A session, wherein you can get your questions answered by directly unmuting yourself or typically typing in your questions in the chat box. Let us now begin. So for the purpose of the webinar, we are going to focus predominantly on the funds section first, and then later on the compare section. So traditionally speaking, to screen mutual funds on NGEN Markets, we also, or rather always have, or rather come to the screener tab, right? This is where you will see parameters called as filter categories. The moment you click on filter categories, there are four buckets that open up, right? For example, you want to screen, let's say, small cap funds today, right? You simply go down and choose small cap as a category. You will see into brackets, there are 29 small cap funds. And the moment you hit close, a list of all of those 29 funds will get loaded in your screen. To this, you could apply basic filter parameters with respect to one, AUM, number two, age, number three, Sharpe ratio, their minimum returns, historical value at risk, and with respect to current holdings. So these are the basic filters that we always had in the screener, right? However, there is a small limit, or rather there are multiple limitations here. Let's consider a simple one. Let's say I have a parameter which says, okay, minimum AUM. I know for a fact that I want only those funds to be in my screener of these small cap funds, which have at least a AUM of 5,000 crore. But I also want to cap the maximum AUM for the funds that I'm going to screen to a certain XYZ level, right? I cannot practically do that in the funds screener tab, right? Therefore, we have a robust method of screening funds in the query tab that we'll be focusing on today. The query tab is typically located right here beside the screener tab. We have a whole list of whatever column headings that you see in the screener as potential filter conditions to screen mutual funds. We will see that one by one. So let's go to the query tab. So this is the query tab. Now, the moment you come here, there are some basic parameters that you see here. First is, of course, we are on build your own query, right? Wherein you will be setting some conditions and a query will be created. Second is load a example query. Let's say you want to understand this, going forward, and then you want to see how this really operates. So simply click on this and a sample query will load for you, right? So these are the multiple conditions. There's a logical operator between each of those, right? You can either keep it as a logical operator of and or, right? So either of that. So you can definitely have a look at a sample query by clicking on load example query. Now, if you want to clear everything that you see right now on your screen, then you simply click on reset query. The moment you click on reset query, all the conditions that were loaded will go away, right? Additionally, once you've built a query, you can also save that, right? Let's say you've saved some preset queries. You simply need to click on load saved query, and you can reload the saved query from here. So there's a saving option enabled here as well. Now let's actually hands-on create a simple basic query. We'll start from a basic query. So we are going to start off with one single or couple of basic conditions, wherein first we are going to focus on small cap funds. Second condition will be their AUM has to be between 5,000 to 25,000 crore, and their minimum age has to be 5 years. How will you build that, or rather, how will you simulate that in the queries tab? You go back to NGEN Markets. The first toggle will let you choose between regular or direct funds. Let's say today you want to deal with all the regular funds. So you say, okay, select plan regular. Next is the select statistic filter, wherein you will find all the major categories or other major parameters that you want to screen them on. So the first parameter is going to be the small cap funds as a category. So that will fall under SEBI category. So I choose SEBI category and it says, okay, is what SEBI category do you want to screen today? There'll be a second level drop down wherein you'll be choosing small caps because we're going to screen small cap funds today. So you choose small cap and you say add a condition. The moment you do that, you see there's a prompt saying found 29 funds which meet these conditions, because there's only one single condition that we have input right now. If you click on show 29 funds, entire list of the entire 29 funds will show up beside on this right hand side panel. Of course, you can choose to download this into an Excel sheet. Alternatively, take this to the compare section for further analysis. But to this, we are going to add two more conditions. The two more conditions were AUM has to be between 5,000 to 25,000 crores. Let's build this first. So for that, I again click on the statistic filter, and now I choose AUM in crores. That is mentioned right here. You click on this and you put in a minimum and a maximum range. Right there, we've solved the limitation the screener section had, right? We could put only minimum AUM there, but now in the query tab, you could put a range. So I'm going to put in here, so 5,000 crore is my minimum AUM that I want from the funds that I'm screening. And the maximum one has to be capped at 25,000 crore. And I say add a condition. Now, what you see here is the second condition gets added here and the logical operator becomes AND. That means I want small cap funds with AUM between 5,000 and 25,000 crores, right? So only those funds will show up which adhere to or agree to both the conditions. And such funds are only 12 in count. Previously, we had 29. So practically by adding this one condition, we have filtered out the rest and we are left with only 12 funds. Again, the moment we click on show 12 funds, this entire list of funds will show up right here. And of course, you can sort it on the basis of AUM and view the funds. Right? So Invesco India Small Cap has 5,092 crore as AUM. And in this lot, with the set conditions that we've added, Axis Small Cap Fund has the highest AUM. It's 23,771 crores. To this, the third condition that we are going to add is minimum age of 5 years. Now, how will we add age condition? For that, again, we go back to select statistic filter, and we are going to choose in the launch date parameter here. You click on launch date, and you will see two dates. Because we are going to set in a minimum age parameter, what we will typically be modifying is the end date. We do not want funds which have launched, you know, less than 5 years ago, right? So typically, I mean, we want to set this as 2019, right? Only then we will exclude all the funds that have been launched between 2019 to 24. That's practically excluding the younger funds. The moment we put this as 2019, so 11 September 2019, we say add condition. From a list of 12, let's see how many funds we are left with. The moment I say add condition, we see that there are 10 funds which adhere to all the 3 conditions that we have inserted. Now, the moment you click on show 10 funds, this is a list of all the 10 funds that meet all of our conditions. Now, let's move forward first and take them to the compare section and do comparison with respect to their performance with respect to benchmark and category averages. Later, we will come back and understand how you can actually build in, slightly advanced level queries, right? Using the same query tab, right? We'll be covering 2 more queries. One is an intermediate level query and one is another advanced level query, right? But first things first, let's take the entire list in the compare section and do some performance comparison with respect to benchmark as well as category average. So for that, you need to click on this icon, which says add all of this list of funds to the compare section. Again, here we've addressed one more limitation of the screener. As you would be aware, from the screener, at one point of time, you can take only 50 funds straight away in the compare section. This limitation is practically addressed in the query tab, wherein there is no limitation with respect to how many funds you can take. You can take the entire list that you have in the query tab right inside to the compare section. Now I'm going to do exactly that. I click on this icon, all the 10 funds which adhere to all of the 3 conditions that we had input have gotten added in the compare section. Compare section is a section where we do further analysis on these funds. The first thing that we will do is we will add a yardstick of a benchmark. Now, because we are screening small cap funds, the relevant benchmarks are going to be Nifty small cap 250 as an index, right? So I'll go here in add other items at the top, which are color coded into blue, right? And I search for a relevant benchmark. So that's Nifty small cap 250. I choose this and the benchmark gets added right here. Now, the blue color code is to just identify or rather distinguish it from the other funds. When it's a blue color code, you understand that this is an index. Similarly, I'm going to add a category average of all the small cap funds as a yardstick to measure the performance of these small cap funds with. For adding category average, just below the benchmark search tab, there is another search tab which says historical category averages. You simply click on this and search for small cap. These are the 2 benchmarks, one of course being category average and one of course being their respective index. Now, to this, once the data is here, first thing that you will do when you are in the compare section is you will change in the start date. Let's say you want to compare the performances of these small cap funds with respect to the last 5 years. Then you change the start date by clicking on this settings wheel that you see right here beside the returns column. Now, the moment we change in the start date, this is going to take effect for all the color code columns into green, right? So all of these color coded columns, so CAGR, standard deviation, Sharpe ratio, Sortino ratio, all of this data is going to change with respect to the date that we put. Let's click on change start date and let's put in 5 years. So that's practically 2nd of September 2019 and I hit go. Now, considering first parameter, let's say I want to screen funds which have generated the best return. So I sort it on the basis of CAGR. You can sort it twice. I mean, if you sort it once, it will get sorted in ascending order. Click on it again, it will get sorted in the descending order. So currently this is descending order, that's highest to lowest. In the last 5 years, we see Canada Robeco has generated the highest CAGR. Of course, please note this is provided. We are considering only that set which meets the balance the 3 filter conditions that we have put, right? AUM, age, and of course, AUM, age, and the minimum, typically the launch date, basically the age, right? And AUM, of course. So with those 3 conditions, the fund that generates the highest CAGR in the last 5 years happens to be Canada Robeco small cap. Now, the benchmark's CAGR is 32% in the last 5 years. Benchmark is this one, Nifty Small Cap 250. So we have DSP and a HSBC, which have practically outperformed the benchmark with respect to generating its returns, but that these funds, I mean, giving these funds might not be the best decision because these two funds have not been able to beat its category average. The category average CAGR for the last 5 years of small cap is a return of around 33%. Right? So practically, if you could, you should typically be avoiding these two funds as well, and typically focusing on either of these four. Question of Franklin, iPro, Axis, and Aditya Birla ideally should not arise because these funds have practically not even been able to beat its respective benchmark with respect to returns, of course. Right? If a particular investor is investing into small cap, it is, he's going to be aggressive, is going to focus on highest returns. Therefore, I say CAGR when the basis is CAGR. On the other hand, let's say if you're trying to, give this for a slightly moderate investor, which in that case, you'll consider Sharpe ratio as a parameter, which typically is risk-adjusted returns. So it considers the returns as well as the volatility that goes beneath generating those returns. In that case, what you should be focusing on is the Sharpe ratio. Let's sort the funds on the basis of Sharpe ratio. Again, highest to lowest. We see that there's only one fund which fails to outperform the benchmark when it comes to Sharpe ratio as a parameter. And that happens to be Aditya Birla Small Cap. Its Sharpe ratio is 0.94, which is not even crossing the benchmark Sharpe ratio. On the other hand, we have undisputable, top performance with respect to Kotak, Canara, and Tata, which have not just outperformed their respective benchmark, but also respective category average. These are kind of dicey. I mean, you could go ahead with it, but you have better options like that. Right? So this was the performance comparison with respect to benchmark and of course their respective category averages. Now with this, you can also, these are of course independent return measuring parameters, right? CAGR, standard deviation, Sharpe ratio. If you want to find out some relative return measures, right? So for example, beta, for that matter, annual excess, meaning alpha over the benchmark, then you need to use this scroller at the bottom in the compare section and move on the right hand side. The moment you move on the right hand side, you will start seeing some pink color coded columns. Now these currently will be blank. That's because there has to always be a benchmark to calculate these parameters, right? Annual excess, but over what? There has to be a benchmark for that. And unless and until this relative return column is ticked, there will be no data here. The moment I tick this, the data will start coming. Now, please note, a benchmark has to be, a relevant benchmark has to be input here as well. You inputting that here will not by default come in here as well. So you will have to ensure for same apples to apples comparison, the both of the benchmarks are same. So if it's Nifty small cap 250 here, we also need to put in the same one here. So Nifty small cap 250, we put that and the data comes in, right? Again, the date has to be matched with what we have in the green color coded column. So that's 2nd of September 2019. Only then we can ensure that this is a fair comparison. So then we choose 2nd of September 2019. And let's sort this on the basis of cumulative excess. So we have funds until HSBC small cap, which have practically managed to generate a positive excess, meaning extra return over the benchmark. On the other hand, these have not even been able to generate a positive alpha. There's no alpha basically for these four funds. Of course, this is for the last 5 years. The moment you change the start date, analysis is subject to change. Again, beta is available right here. So beta of the benchmark with itself is going to be 1. We can practically see all the funds in the list have actually reported lesser betas with respect to that of the benchmark. Now, let's focus on parameters like risk versus return. So in risk versus return, which is of course our next point of discussion in the webinar. In risk versus return, the tab you can practically locate right here. right? The moment you click on risk versus return, you will see all of these funds that you have in the main list will be plotted basis two parameters. On the x-axis, we consider annualized risk, that is the standard deviation. On the y-axis, we consider annualized return in percentage terms, right? And you will see this entire scatter plot being divided into four different quadrants. Now, there'll be no specific demarcations, but those are going to be quadrants that you'll see at the top here. So low risk, high return is the first quadrant. Low risk, low return is the second quadrant. High risk, high return is the third one. And high risk, low return is the fourth one. Now, if you see a fund getting plotted on extreme right-hand side of this scatter plot, right? If it gets plotted somewhere here, that's the right-hand side, that means it typically takes in higher levels of risk because standard deviation goes on increasing because it is getting plotted on the x-axis here. On the other hand, if a fund gets plotted at a height, that typically means that it has generated a better return because on the y-axis we measure annualized return. So higher the better, like that. Right now, let's consider this for last 5 years, and let's see if this matches with what conclusion that we're drawn, right? So September 2nd, and you say go. So we figured that the beta of all the funds, or rather, the standard deviation of all the funds is lesser than that of the benchmark. And that is exactly what you can see even in this scatter plot. Nifty small cap 250, which is the benchmark itself, lies extremely on the right-hand side. All the other funds with respect to their standard deviation plotting is on the left-hand side of this benchmark, which practically means these take in lesser level of risk as compared to that of the benchmark itself. Second conclusion could be if the investor is very conservative, the best bet would be to go ahead with a Kotak small cap fund, right? That's because with the least level of risk, it generates the best return. There was, of course, a small cap fund as an alternative, but with the same level of risk, Kotak generates a better return. And you can see that right here. So Kotak return is 30%. Risk is around 16. Axis, again, risk parameters at 16 itself. Return is at 27. So Kotak is definitely a better option as compared to Axis. If, of course, the investor is slightly on a conservative side. On the other hand, the best bet will be Canara Robeco Small Cap Fund. That's because it takes in moderate level of risk, also generates the highest level of return because it is at the peak of all the other funds, right? So that's the highest level of return. Now, of course, this scatter plot is subject to change the moment you change the start date. Let's say you want to do this for the last 1 year period. Let's simply change the start date and hit on go. And we see how the categorization changed. So Kotak Axis practically remain at a similar level. Canara Robeco has, however, stooped low, right? And the best performing small cap fund happens to be a Invesco India small cap fund if the time period is considered as last 1 year, right? Canara is here at the bottom. So if you are anyway taking that much level of risk, moderate level of risk, you might as well go with Invesco if the time period, in the last 1 year, this has been the better performing fund. But the interpretation that each of these small cap funds have a risk that's lesser than that of the benchmark stays constant because benchmark lies on the extreme right-hand side always. Next, let's come to the other two parameters, which were with respect to position overlap and correlations. Now, position overlap as a parameter speaks about how common, or rather how similar, are the underlying positions, meaning the underlying stocks of two funds under consideration. To check what all are the similar holdings, you simply need to hover on a particular cell that you see in this position overlap matrix. So in this case, let's focus on the first row here. That's Kotak Small Cap. And we're comparing Kotak Small Cap with Franklin India Smaller Companies Fund, which is getting highlighted here at the top. So this position overlap always happens to be comparison with two funds at one point of time because it's a metric structure. Now, the moment you click on this 14%, you will see the details of the common stocks in both the funds. Now, of course, these common stocks are going to be at different degrees, right? So, for example, Blue Star as a stock is held by Kotak Small Cap Fund as well as by Franklin India Smaller Companies Fund to different percentages. So, Kotak Small Cap holds on to this particular stock to an extent of almost 2.75%, and Franklin India Small Companies holds it to an extent of 1.90%. The lower of the two is going to be our overlap, right? So 1.90 is the overlap between Kotak and Franklin for Blue Star as a stock. Similarly, if you total all of this up, the minimum overlaps, if you total all of this up, that will come to a 14%, which is always displayed here at the main tab. So this gives you a fair idea that which two funds you could choose if you were to choose two funds from the same category. Let's say you want to give more than one fund from a particular category. Let's say small cap. You want to give more than one fund. Then practically you should know which funds to avoid. So typically should be avoiding Canada and Invesco in the same portfolio because their overlap is the highest in this lot, right? That's 33%. 33% of the underlyings of Canada and Invesco are similar, and these are the details. So if you're giving two funds from a same category, you should be visiting position overlaps before giving those two funds to at least check if the overlap is typically up to 20%. Of course, there's no rule of thumb as to what is a desirable overlap, but practically this is if it increases to dark green, yellow, pinks, and reds, that typically means the overlaps is increasing and underlying common stocks are also increasing. So ideally, what you should be focusing on is the lighter greens if you're giving two funds from the same category. So this is position overlap. Now this position overlap focused on the underlying holdings with respect to the stocks. That is underlying position overlap. But if you were to see what ultimately happens with respect to their NAV movements, how are they correlated? For that, we need to simply focus on the correlations analysis, right? Correlation analysis tells us what are the NAV similarities or that directional similarities of the NAVs of two funds. The moment you click on correlations, these numbers will start popping up. However, please note correlations of funds from a same category will always be on the higher side, right? Because NAV movements are pretty much correlated. Underlying stocks could be different, but the NAVs happen predominantly to go in the similar directions, right? So for example, you see Kotak small cap, in spite of having just a 14% overlap with Franklin, the correlations of the two funds NAV movements are 0.93. Correlation as a number will range between -1 and +1. The closer it is a +1, that means the funds NAVs are very highly positively correlated. Meaning, if Kotak small cap funds NAV goes up, Franklin India small companies NAV will also be going up in the same direction. Please note, we are not speaking about magnitude of how much up or how much down will it go. We're just saying how directionally similar it will be, right? To just gain a perspective, let's quickly add in maybe a liquid fund here, which typically is from a very contrast category. So currently we are having a look at all small cap equity funds. The purpose of adding a debt fund here is to just give you an idea as to how correlations of equity and debt are starkly different, and that is why they're included in portfolios. So let's add in maybe a GM liquid fund and maybe a hybrid fund. It's a conservative hybrid. We've added two funds. Now they will get added right here. So one is from the liquid category, one is from conservative hybrid category. Then you move to correlations. You will see this number drop for these two funds with all the other small cap funds. That practically means that GM liquid fund and Kotak small cap fund practically have no correlation between their NAVs. That means if NAV of Kotak suddenly falls because the small cap space as a sector starts underperforming, then it will have zero impact on JM liquid funds NAV. Similarly, you can check it for a SBI conservative hybrid fund. You see here there are still slightly higher correlations because this is going to be a conservative fund. But typically with all the liquid funds, they are very, very low. The correlations are very, very low. So this was position overlaps and correlations. These two parameters, in addition to screen for regular screening process of mutual funds within a category, can also, this is of course important, but these two parameters can also be used on a portfolio level to check the overlaps and the correlation metrics on a portfolio level to check the diversification of the portfolio. Again, this can be checked. We have that in the portfolio section. So you load any portfolio from the client section or the portfolio section, and we have overlaps and correlations tab mentioned right there. So this speaks upon the correlation metrics of the entire portfolio components. Now, once this is through, we are done with the balance topics of the webinar discussion. The two topics that are remaining is building intermediate and advanced level queries using the query tab. So let's move our focus right there. For that, let's go to the fund section and let's clear this basic query that we have created. So for that, I'm just going to say, okay, reset query. All the conditions will go away. Now, the intermediate level query that we're trying to build is typically I want those funds who are thematic, right? They invest into consumption as a motive, or of manufacturing as a focus, or business cycle funds as a focus. And to that, I'm going to add in a condition that their last 3 years annualized returns should be at least 15% or above, right? So how will we build this query using the query tab? Now, first of all, why I considered this as an intermediate level query, the solution of which could be obtained from query tab is the reason is very important. Because if you were to typically use only the screener to arrive at these these funds, it could be very challenging. That's because the categories that we have here in the screener are typically exactly the same as SEBI follows. We do not make any modifications there. Therefore, unfortunately, these sectoral, thematic, all of these fall under sectoral other sectors and sectoral diversified. Therefore, it becomes a very big challenge to actually locate funds which are only manufacturing, only business cycle from this entire list, because we have multiple funds in other sectors, diversified, sectoral, others. So all entire list is crammed up in one particular category. Therefore, this problem could be easily solved using the query tab. That is why we've picked this condition. So let's discuss on that. You go to the query tab. Now we are simply going to set this as regular only, of course. You can change it to direct. Now, what we are going to use to now sort up these three category funds, which is manufacturing, consumption, and business cycle, is their name, right? If a fund is a consumption-based fund or consumption-focused fund, it will have that in its name, right? Business cycle fund, the name business cycle will be in the name of that particular fund. Therefore, we will select statistic filter as the fund name itself. And you will say, you will type in the name. So the first thing is, let's say, business cycle. You type business cycle, you say add a condition. In a jiffy, right? In a second, we could come up with a list of 15 funds which have a theme of business cycle. And the moment you click on show 15, there's a list of all the funds that gets appeared in front of you, right? Your entire exercise of going to the screener and locating these funds from wherever they are gets reduced using this. Rather, the process gets very, very efficient, right? Now to this, I want to add in the other two conditions also. So I'm going to repeat the same process. Fund name contains, now I'm going to say manufacturing. And mind you, this query tab is not case sensitive. This condition is not case sensitive. So you could put it in capital, small, doesn't matter, even though it is different in the fund's name, right? So I say manufacturing, I say add a condition. Now, please note here, this is again an important parameter. Now, a fund cannot be a business cycle fund and a manufacturing fund, right? It has to be either a business cycle or a manufacturing category fund. Therefore, we will now change the logical operator to or. I want a fund which is either a business cycle or a manufacturing. Therefore, I'll broaden my purview, and I will choose the logical operator as or. And you see from 15, this is now increased to 30 with business cycle and manufacturing. I mean, or manufacturing. It's either business cycle or manufacturing. Again, all of this 30 funds get visible. To this, I'm going to add in third condition, which typically says consumption. So I put consumption here. And I say again, add condition. Again, the logic goes here as well. It has to be or. Only then we'll cover funds from all the three thematic categories. And then we'll say show 45 funds. This is a list of all the 45 funds that we have, which are belonging to either of this. Now, to this, we want to apply condition which says at least the last 3-year annualized return of these three categories should be at least 50%, 15% or above, right? So this is the condition that we are looking to input on this entire three categories. I do not want only business cycle funds with 15% or above return. I do not want just manufacturing with 3 years, 15% and above returns. I want this 15% condition to apply to all the three categories. Therefore, why do I emphasize on that is because I will have to make some changes with this bracket operators, right? So universe has to be business cycle or manufacturing or consumption, and the bracket has to close there. Therefore, I will remove these individual brackets from these three conditions. So I've removed the bracket close from here. I simply click on it to remove it, right? I'll show it again. So reset brackets, right? This is what we had previously. I click on this, the bracket gets removed. Close bracket has to be removed, right? Open bracket has to be removed from manufacturing. Again, close bracket has to be removed from manufacturing. And again, open bracket from here. So practically what we've done is open big bracket. Under that, there are these 45 funds from these three conditions and big bracket close. So now this is our universe to which we want to add the condition of 3-year minimum percentage rule. Therefore, now I will say, okay, select statistic filter again, and I want 3-year annualized returns. And I want, above 15%, right? So I'm going to say 15%, and I'm not going to change 2 at all, right? So at least 15% or more. And I will say add condition now. Now, please note the condition here, the logical operator for this 3-year percentage return condition will always be and, because we want funds from these three parameters. All of these three should have return above 15%. Therefore, here it has to be and as a logical operator. And now, suddenly from the 45 funds that we had, we are now left with 15 funds. The moment you click on show 15 funds, you will see each of these funds are, the funds that have appeared here have 3-year annualized return, which is 15% or more, right? So that's Aditya Birla Sun Life Manufacturing Equity Fund with an 18% return. That's the lowest in the category. And the highest is Bank of India Manufacturing and Infrastructure Fund, 28%. Now, to just ensure that this, understanding of these bracket open, bracket close is clear, I'm going to just show you a simple example that where you could go wrong, right? If you would have not, removed these brackets and you would have kept it like that, then with these, with this condition, you will see there are 39 funds that are located. But let's just check if these 39 funds have actually, met or rather adhered to all the parameter that we've put here. So you simply click on show 39 funds. And you see practically the parameter that we've put, at least return should be above 15%. That category or rather that condition has not met, right? Because this is considering only consumption funds which are above returns between 15 and 54. Therefore, it did not apply that condition typically for the manufacturing and business cycle fund. Yeah, you can see that right here. Therefore, it is very important to make these changes to the brackets. It has to be bracket open, big bracket open here, bracket close here. And to that, this is the condition. Right? I hope this is clear. Now, once we are through with this, we are going to now try to build in final level advanced level query, which typically will deal with four different SEBI categories with different conditions for every category, right? So what I'm practically going to do is I'm going to load in large cap funds, and I want only large cap funds with a volatility between 5 and 15, multi-cap with a Sharpe ratio above 0.60, aggressive hybrid with fund score, NGEN fund score, which is typically methodology to rank funds on the basis of 0 to 10. So I want to, the higher the fund score, the better it is. So I'm going to choose that as a filter parameter. And then dynamic bond funds, because we are practically, trying to see how a portfolio would look like with these four conditions, right? Using the query tab. So this is the YTM condition that I'm going to use for dynamic bond funds. Let's go and build this one by one. So in order to remove entire thing, you simply say reset query. Everything will go away. Let's build this one by one for the advanced level query. So first condition, SEBI category, I say large cap funds. I want only those large cap funds who have volatility capped between a particular set level. So that's 5 and 15. Minimum volatility 5, maximum 15. Because typically large cap is those funds, of course, you're investing in equity, but the volatility is typically the lowest. So I'm going to choose that as a condition and going to say add a condition. So from the entire 39 list of large cap funds, we are left with only 9 large cap funds which meet these parameters, and those are these. Right? Their volatility is capped at. Of course, here we're not putting any age as a parameter. Therefore, you'll see all the younger funds also coming in here. Right? So you remove the bracket from here. And so this becomes one set. Okay. Now we want either, we want large cap funds with this. To that, we also want multi-cap funds, which have a Sharpe ratio above 0.60. So we'll go back again. And now we'll say, give me multi-cap funds. So that's SEBI category, multi-cap now. Add a condition. I want these multi-cap funds which have a Sharpe ratio above 0.60. So I'm going to say Sharpe ratio, which will be located into these risk parameters, right? So Sharpe ratio above 0.60, right? So 0.60 and more. I say add condition. Again, this condition I want to apply to only this multi-cap as a category. Therefore, big bracket open here, bracket close has to be removed from here. So this becomes our second set. And I want either large cap or multi-cap. So therefore, the logical operator between this will be OR. Right? Suddenly, the count is increased to 32 funds. Right? So this is set 1. This is set 2. The moment you click on show 32 funds, you'll get this, right? To this, we'll go one step further. Aggressive hybrid funds with fund score between 6 and 10. You go back. Aggressive hybrid is what you choose. It's just that we are doing all of this so that you just get used to this query tab, because this practically is very, very robust and efficient way of doing that, right? So the more you practice, the more you'll get used to. SEBI category, aggressive hybrid. One second. Yeah, aggressive hybrid. Aggressive hybrid, add a condition. And fund score, NGEN fund score. The color code that you can see right here, this is NGEN fund score, right? So you choose NGEN fund score, and I want that between 6 and 10. That means in the top quadrant. And I say add condition. Again, important, this has to be OR, and brackets have to be removed from here. So this is our third set. We have 35 funds now, right? To this, adding the last condition before taking them to the compare section. It's typically dynamic bond funds with YTM between 6.5 to 7.5. So you go back. This also highlights the fact that there are no practical limit on the number of conditions you can add. You can go on adding as many if you think that is really logical. And practically applying brains is only one time work. Once you've come up with this customized query, you can actually save this query for further reference. You need not keep on applying brain again and again to this to build these conditions. Once you've put that conditions in place, you're through. You can save this query and load it multiple times whenever you want to refer back. So dynamic bond funds, add a condition with YTM, because I mean it's debt category funds. So therefore the measure to measure the returns is of course YTM, right? So I'm going to choose in net YTM as a parameter. Net YTM has to be between 6.5 to 7.5. And I say add a condition. It has to be or here. Brackets have to be appropriately set. Right? So this is a list of 39 funds that we have gotten, setting these 4-level conditions on different SEBI categories. You click on show 39 funds, all of these will start showing up here. Right? You can typically take them into an Excel download. You can just take a download of this and then go forward, or you can take them to the compare section for further analysis, as we had discussed it for small cap as a category. Right? So that can be done. So this is how you can build complex queries, right? And you can practically save these queries. So let's say, as we discussed, right? How will you save it? You simply click on save this query. You name this, okay, this is advanced query September, and say save. Now I'll just say reset, everything is gone. Tomorrow I log in, I want to have those same conditions, right? You simply say load saved query. You locate the name that you had saved it with. So that's 13 September. You click on the same conditions with the brackets that you had put. Everything will come up in the similar manner, similar fashion. You now just say show 38 funds. You have the list of funds, right? So this is how you can reload the saved query, save the query once you've created it. So that's about it. That this brings us towards an end of the topic specific webinar discussion. The forum is now open for a Q&A session. If you have any questions, please feel free to either type it in the chat box or direct unmute yourself and speak. Thank you.
Prajakta,
Yes.
I want to share a screen with you. I have a very typical query. Is it possible? Can I
Uh,
share my screen?
can we take this
Okay.
1-to-1? I mean, after the webinar, I'll ask someone to call
No, it
from the
is that
office.
one of the investor has 57 funds.
Okay.
I don't know what to do. Anyway, you continue with this. We can take
Yeah,
it
I
later.
mean, specific this. I mean, can we take that just after the webinar? I'll ask someone to give you a call separately. Yeah, we can set up a Zoom if that's fine with you.
Fine with me, no problem.
All right, all right. Thank you.
Yeah, Prajakta, Ashok here.
Yes, please tell me.
Yeah, no, it may not be relevant to this session, but
Okay.
tried to upload through the cash statement,
Yes.
and somehow I'm not getting the portfolios. Maybe somebody, if I have a number, support number, or somebody can call me. Maybe.
Oh, yes, yes. I mean, absolutely. If you can drop in your number on the chat box, I'll just get someone from our team to call you.
Thank you. Did you get my number? Yeah.
Yeah, it's come up in the chat box. Yes, thank you.
Thanks. Thank you.
Yeah, I have one question, Prajakta.
Yes, please go ahead.
When we go for that comparison, risk reward,
Yes,
x-axis, y-axis,
yes,
it is so dynamic in nature. Ki
yes,
when the moment we change the time scale,
yes.
entire matrix changes.
Yeah, I mean, that is right. So typically,
And
that,
now we are
yeah,
seeing that new funds are delivering better returns, but their average age is pretty low, maybe 1 year or 1.5 year, 18 months. Lot of new funds have come which are doing pretty good. We are finding little bit difficult in sorting out that.
okay. Can you, I mean, in risk versus return, so typically what happens is you will get to set in the start date, and
Yeah,
it will always be capped, uh, you
with the
know,
lowest one.
yes, exactly. I mean, you cannot go beyond the youngest fund's
Exactly.
minimum start date. Yes, that is
Yeah.
right.
So, and the moment we try to change it, we have to delete that fund. Probably, for example, Bajaj large and mid cap fund is having, flexi cap fund is having only 12 months history.
Yes.
But that fund is doing pretty good.
Hi, sir. This is Arunab.
Yeah,
So
yeah.
the issue is that if it's doing pretty good, I mean, it's doing pretty good in the last 12 months only, right? Because it's only 1 year old.
Yeah,
So,
that's it.
so that's the entire issue, right? I mean, obviously, we can't put on the same chart a 2 year return of a fund alongside a 1 year return of a fund because that will not be a fair comparison. So, I mean, if a fund is new, you know, it has no history for us to judge it by. So, if it's done well for a year, that's great. Um, but
No,
maybe the
what
fund manager is good, and that's some information that you guys will know. But
yeah,
in terms of performance, in terms of pure data, if a fund is new, then it is impossible for us to kind of um,
ex-
you know
Arnab sir, that's
yeah
where I am coming to exactly. Ki when we are capping that time frame to the lowest age fund,
yeah.
can we remove that lock so that
Well,
we
see,
capture?
if we remove that lock, what will happen is, let's say if we take this, make it 2021, which it won't let you do right now. What will
Mhm.
happen is one of the dots will represent a 3 year return,
Yeah,
and the other dots will be representing a 8 month return or a 13-month return. Those
yes.
dots are not comparable. That would be a wrong chart for us to show you. That's the
Oh,
reason we've because obviously if you're comparing the, let's say, the effectively what this chart shows you is effectively Sharpe ratio, because risk and return is kind of being displayed in one place.
yeah.
So that would be like comparing a 3 year Sharpe ratio of a fund to a 1 year Sharpe ratio of a fund, which could be spanning various different periods, and also obviously different market cycles as well, and obviously the fact that it's a longer time period. So the issue is that, I mean, at least from our perspective, comparing against different time frames is not right. So that's the reason that we have to lock it. I mean, um, I know there are some analysis outside of NGEN which shows this, but in our opinion, that's not the right thing to do.
Fair enough. Fair enough. No problem.
Any more questions? Please let us know. Okay, then, if there are no further questions, we'll close today's session. You can definitely view the recordings of this session as well as our previous webinar recordings on our YouTube channel. The link for that is, put in right here. You click on the YouTube videos icon. It will take you to our YouTube page. There's a dedicated playlist for webinar topics. Even this week's webinar will be uploaded by next week. Thank you everyone again for joining in. Have a great weekend ahead.